Hello and welcome to the Leaders in Cleantech podcast. I'm David Hunt, your host, and also the founder of Hyperion Search, the global search firm dedicated to the energy and mobility transitions. This week back in the studio with a great guest, fresh from his time at RE+, and want to talk to all things energy storage globally, and particularly looking at perhaps some of the US aspects at the moment. My guest is Andrew Gilligan, who's VP of Global Markets and Development at Fluence. Andrew, welcome.
Thank you, David. Pleasure to be here.
It's good to have you. So because last time we spoke very briefly, and because we've been in the sector for so long, I think there was the potential we could go on forever. So I've bought myself a little timer to keep us on track. But we still have a good time to dig into both your background and the storage markets globally, and to see how they're performing, see what your views are, and see obviously what Fluence are up to at the present time. So, but perhaps we can start a little bit, Andrew, because you've been in the sector, as I say, for quite some time. Perhaps you can just give us a little bit of what's brought you to the role at Fluence and what you're doing at the moment.
Yeah, absolutely. Yeah, as you said, currently at Fluence, where I help oversee our global pipeline of battery energy storage systems. I think we'll get into Fluence a little more, but we're generally looking to sell large battery systems to big energy companies for use on the power grid, and I help manage our global pipeline, right? What is the pricing we can sell these battery energy storage systems at, and what are other ways we can really grow that pipeline? Mm-hmm. But to back up, as you said, probably like a lot of your listeners, my journey into the clean energy space started in university, where I learned about the significance of climate change and how really as an issue of our time, mm-hmm. but also, hey, there are solutions, there is technology to help combat this. At the time, for me, it was 2008, 2009. That was really solar energy. The U.S. had passed some incentives for solar energy, and so there was some growth. And I unsuccessfully tried to start my own solar consulting group with some friends, but through that, I met a individual, Yuri Horwitz, who had just started the solar company Sol Systems. Mm-hmm. And so I joined there and was there for the next 11 years. We went from, I think it started 3 or 4 of us around a small table to maybe 200 people, right? Delivering billions of dollars worth of solar projects for some of the largest customers in the world, with some of the largest investors in the world. And so I was fortunate enough to as the solar industry exploded over the last decade and that S-curve, to help grow one of the leading solar companies in the US, whether it's project finance, project development, and lead a lot of different business units. And then about 3.5 years ago, I made a decision to join Fluence Energy, which had just gone public, right? And maybe not a unique thought, but as I'd come from solar and remain incredibly bullish on solar and see that growth, right? Any market with a lot of solar, you're eventually going to need battery storage. So it was a great opportunity to join a global leader in battery storage that was looking to grow. And so I left at that. And yeah, I should also say up front, I listen to podcasts. I'm a fan, and you've got a lot of great guests. I know a lot of them are CEOs or founders, and I'm neither. But I believe that hopefully, and maybe because of that, different experience, having helped join and grow some leading solar now storage companies, we can still provide some great insight to your listeners.
Yeah, no, absolutely. And just in that point, you say not everybody is a founder, but being employee number 2, 3, 4 in a company which goes on to scale to that degree is in itself almost like a founder's journey. It's certainly going through a lot of the same challenges and the sleepless nights, I'm sure, during that process. And anyone who stayed on the solar coaster for that 11-year period has got a few scars to tell and a few stories to tell.
Certainly.
So, but as you say, that's quite a relatively obvious way that, as we did, and I did with Hyperion also, is coming from solar and then recognizing actually the deployment of solar is fantastic, but we need this thing to enable the further scaling. This thing turned out to be a battery, which is where you are. So we're going to dive a lot more into that. But again, just as a head up for context, because Fluence, as you say, it's a listed company, is by no means a typical startup, but it's actually not that old a company. I remember obviously when it was founding and working initially with the company and meeting with them out at Intersolar in Germany, I think, in the early days. So again, perhaps you can just give us the audience a quick sort of overview of how Fluence is at the moment and what sort of the scale of development that you're overseeing globally.
Sure. Yeah, it's and I mean, again, it's mirror solar, right? As storage industry has exploded, Fluence has been able to grow with it. But I just checked, we have deployed now 43 gigawatt hours of lithium ion battery energy storage systems onto the power grid globally, right? I think that's across 40 different countries and power markets.
Yeah.
And these are primarily utility scale battery energy storage systems. The US is our largest market, but we're very active in many European markets, Australia, Taiwan, Philippines, Chile as well. And so that's the current, maybe close to 2,000 people, right? The current scale of Fluence. But it's quite an interesting corporate history. As you mentioned, Fluence has been around since 2018. But really the origins of Fluence, right, come out of a business unit within AES.
Yeah.
AES is a large multinational energy company, and as early as 2008, a few individuals within AES created this group to start to look at, hey, what are the necessary jobs to be done on the power grid, and are there any new technologies that can serve that?
Yeah.
And it turns out lithium ion batteries were a really good fit for, at the time, frequency regulation. And so these individuals in 2008, 2009, connected the first ever lithium ion battery storage system to the power grid here in the US, and then quickly after in Chile. And then for the next several years, we're really developing markets, developing use cases for this lithium ion battery storage technology in markets like Ireland, Australia, Chile, some of these early markets. And I knew of them a little. We're in the DC area here, and I didn't know, are these guys crazy or are they onto something? It turned out to be the latter. And so again, as battery costs come down and there was more and more projects, it got to the point that in 2018, that group within AES joined up with a similar group within Siemens to create a 50-50 joint venture called Fluence, right? And continue that growth. And then we went public at the end of 2021, which is around when I joined. And now AES and Siemens remain minority but substantial shareholders, and it continues to scale as more markets open up for battery storage, the projects get bigger, and really battery storage becomes a critical way of how power markets keep the lights on.
Yeah. Not bad parents to have, by the way, to have organizations like that to draw on that.
Certainly advantage for a startup.
Yeah. To have both of course, the balance sheet always helps, but actually that sort of knowledge and experience over years, because again, very challenging markets, not just in terms of cost, trying to obviously create value projects or commercially viable projects back then was a challenge in and of itself. But of course, just the technology and the fact that it was still frontier stuff, that you're still making stuff up as you go along in those early days, or pre sort of the formal founding of Fluence.
100%. I think the early individuals who are still mostly at Fluence did a really good job of not just focusing on the technical innovation, which is of course key, right? Mm-hmm. But the market use case and applications. And so when we talked to some of the first customers for our battery storage systems, it wasn't, hey, here's this new technology, right, that of course exists in consumer devices and starting EVs. It was more of, hey, here's what a natural gas power plant does in terms of helping you with some of the technical soundness of the grid by providing frequency or capacity.
Yeah.
We can also do that through battery storage. So it looks very similar to the utility that we were selling the first projects to, and it made it more of a commercial discussion than pure, here's this new technology innovation. I think can be easier to sell, especially in a sector where, utilities and large independent power producers they're not risk seeking, right? Yep. And they're actually quite risk adverse customers. So I think that was a very smart strategy in those early days.
And some foresight, because it's easy to look back in hindsight and look at the sort of the evolution both of the technology in terms of energy density and the sort of safety and the deployability of batteries, but obviously the cost is an obvious thing as well. I mean, I think when I started in solar was $3 a watt, which is now is whatever 9 cents or something, and batteries are not to that exact level, but clearly over the last 7, 8, 9 years have gone through again a phenomenal cost reduction as well as a sort of technology improvement. But again, it takes a bit of foresight to think that this is a thing, because I remember also you mentioned EVs there. Even 5 or 6 years ago, people were still thinking, yeah, that's wacky stuff, it's never going to happen, maybe 2050 kind of thing. So to have the foresight with batteries that they're going to play such an integral part of our energy systems in a relatively short period of time takes some foresight.
It definitely takes some foresight, and that was obviously, AS Fluence was a leader in battery storage. There are a couple other companies looking at it, but was a leader. I think solar and storage, right, is greatly benefits, of course, from the idea, hey, we're going to ride some technology cost curves. So you could look at what's happened with solar. Every time the global capacity of solar doubles, I think the price drops by 18%, right? There's that law that's been observed. And you could start to see, right, we had EVs were a little ahead of the battery storage industry. So you could see the startings of a similar technology cost curve, right? That, hey, if we keep increasing the capacity to make batteries, there's going to be some relationship that will drive down price, because this is essentially technology, right? It's not a fuel like a natural gas or coal we're competing with. So there was some evidence, if you look at technology cost curves, that this would happen. But as all startups, early ventures, there's also a little bit of a leap of faith. And hey, can we help make this happen? Can we convince regulators and utilities that this is the future? So it's always a little bit of both,
Yeah. I want to dive into various technology conversations as well, but let's look at where you are at the moment. It's very interesting, again, because of what's going on, I guess, politically. We won't get into the politics of things, but geopolitics is playing a part in how markets evolve. Perhaps always has done to a degree. Regulation has always been a factor of interstate and intercountry, of course. Perhaps you can give us a flavor of how you see, because you have this global responsibility of how is the US versus the European markets, for example, in terms of the ease of deployment and the sort of the volumes that you see moving through, and perhaps some of the challenges in each of the markets, because they'll be different, but they'll exist.
Yeah, it's a great question. A lot to unpack there. High level, right? Fluence, we have central or parts of the team that are designing the product or manufacturing the product or buying certain components from other manufacturers or bringing it together. And then we have 3 regions where we sell and deliver our battery energy storage systems. One of the regions being Americas, another being what we call EMEA, and Europe, Middle East, and Africa. But it's predominantly focused on Europe, right? To date, Americas, and particularly really the US, has been our largest market, but it still is I would say roughly half of our revenue. So Europe and then in APAC, our final region, are both still critical pieces of what we're delivering and selling on an annual basis, right? And there is a lot of overlap in how these markets develop, right? Both in the US and Europe. Usually what drives value of battery storage is when there is somewhat islanded grids and or high levels of renewable energy penetration, right? So Ireland was an early, big driver in battery storage systems, just like Texas in the US, which is actually its own physical grid, right? And both are a little deconnected and have high levels of renewable, right? And so that makes storage valuable. Also, in a lot of both Europe and US early markets, the first role that battery systems played was often not to shift energy, but really to provide what we call ancillary services to support the technical quality of the grid through things like frequency and voltage. And so batteries would somewhat prove themselves, whether it's in, as I said, Texas or Ireland, the UK, some of these early markets. And then as the market matures, you actually start using the batteries to really shift energy and supply energy at peak times. So I think a lot of similarities in how the markets, have evolved. And I'd say our customers are in some ways similar, because our customers across both Europe and the US, our customers are large utilities or
Hmm.
independent power producers who are really infrastructure owners,
Yep.
right? And are going to use project finance for these battery energy storage systems. So they're not looking to take a lot of technology risks. They're looking for high levels of bankability. Safety is very important. So both markets share that. I think they started to diverge a little more in that the US is really now a market that's becoming served primarily by a US supply chain,
Hmm.
while the European market is still predominantly being served by an international supply chain, mostly coming from Asia.
Yep.
And of course, there are some, cultural differences just in how you approach customers or business and certainly regulation differences. So some differences I think now emerging that we can get into, but a lot of underlying similarities.
Yeah, yeah. I think it's always been the case that in different geographies, the stacking of revenues and the business model has always had to flex a little bit to what's going on. I think I'm not sure how it is in the US. Certainly in Europe, there's a lot of countries now, Netherlands in particular, but also UK and Germany, other places now starting to look at a lot of negative pricing, which clearly is a challenge for anyone who is deploying renewables of any description if you're
Sure.
having to then either curtail or give the stuff away, even pay to give it away. So there are different drivers. How does I guess, how do you view that evolution, perhaps looking at independently at the European market and the US market, the evolution of the business models and the use cases that will continue to drive adoption of storage?
Well, I'd say negative prices are sure they're not fun if you're the owner of the wind or solar asset. I've been there, but they're a good signal for battery storage,
Yeah.
right? And that's one of the reasons Germany, Netherlands, we're seeing increase as hot and active battery storage markets. I would say the biggest evolution I've noticed, and this is a little maybe U.S. answer, but is batteries have proven themselves.
Yep.
Batteries have two grid operators, right? So they're no longer, hey, let's do a 20 megawatt project and see it can probably give us some capacity and see how it does. Instead, grid operators in California, Texas, Australia, UK see batteries as a critical piece of how they manage oftentimes peak demand and generally their most challenging constraints to ensure resilience through the grid, and they can have the lights turn on forever, right? So, in California now, I think batteries can provide up to 20% of that peak demand in the evenings when everyone comes home and needs energy. And so because of that, right, at least in the US, we've seen is you're able to get contracts from utilities for the value that the batteries provide,
Yeah.
right? And maybe you're not so dependent on all these different merchant revenue streams, which can be harder to bring together and get financing against. So we've actually seen an increase in the number of whether it's a tolling agreement or a power purchase agreement, essentially a contract from a utility or a financial player to say, hey, we recognize the value of battery storage. So let us give you a monthly payment,
Yep.
right? And you need to operate the storage system in a certain way. But like if you do, that is value to this grid. And so we will pay you some fixed price for it.
Yeah.
So those type of structures have been increasing. And I think that's both a testament to batteries have proven themselves and also it's inherently easier to get financing against. And the European market's always been a little more focused on merchant revenue
Yep.
than the US, right? Which in some ways makes it harder to pull the business case together. But we are seeing an increase in the amount of hedging contracts and other things available in the EMEA markets as batteries don't just provide frequency regulation, but they also actually are shifting energy. So that's the number one evolution I would say that we see happening right now on the
Yeah.
contracting side.
Yeah, I should say the dual benefit of storage. So on one hand, it is a money making mechanism, particularly in the merchant markets where it's essentially you're hedging and you're trading flex. On the other side, it's essential tool to literally keep the lights on as we have increasingly large numbers of decentralized generation assets. So it's kind of those two things which are, I guess, for different customers driving a little bit more the sort of the uptake.
Absolutely right. I think that especially in now that we're entering a world where again, it's a little bit of US centric answer, but usually we see similar trends. We see a world where, for my career, it's been a world of generally flat growth in terms of overall electricity demand in developed markets, right? Since 2008, 2009, that's changing, right? So
Yeah.
now, given AI data centers, given electric vehicles, electrification, most markets are now projecting an increase in electricity demand. And so, frankly, that's driving, hey, what can supply both energy and capacity in the relatively near term in a proven way? And there's not many better answers than solar plus storage,
Yeah.
right? And so that overall macro need is driving a lot of different renewables, right? But also battery storage, because you don't just want the intermittent energy. And so we're seeing when some of our customers go and have their battery energy storage system, there are different ways they can look to monetize it, to your
Yeah.
point. And but the overall thing is they'll be able to monetize it, right? Because there is that underlying demand for energy, for capacity, especially that can be delivered in the relatively near term.
Yeah, yeah. Looking at some of those other, I guess, challenges and opportunities, because clearly a challenge is always an opportunity, and vice versa. I guess the two things which are ongoing at the moment, in particular the US, and it'd be interesting to take a view on the OBB and generally sort of the local content thing, which again the European Union, of course, are looking at bringing in versions of local content, perhaps not to the same degree, but certainly bringing that in. So you've got the challenges of supply chain on one side, and then you touched on this, I think, already. You've got energy use demand from AI and data centers essentially becoming it's going to be a huge shift and a huge demand curve. So perhaps you can give some insights or some thoughts on how Fluence or how generally the markets can adapt to those challenges.
It's a really interesting point, because basically the first part of your question on the supply chain side, Fluence, when I look at Fluence, and I think when I look at all probably global players who want to be successful in the US, basically we have a US supply chain that's serving our US projects and an international supply chain that's serving all of our other markets, right?
Yeah.
Chile, UK, Germany, Netherlands, Australia. And then that supply chain is mostly coming from Asia, right? In terms of batteries, often still are coming predominantly from China. We do a lot of manufacturing in Vietnam of different parts as well, in India. But basically there's two supply chains. There's US projects that are getting served by stuff made in the US, and then everything else by stuff coming from Asia, right? So that's a development over the past 4 or 5 years, right? And different than the solar industry, as you know, and at least historically. And we've been investing in it for 4 or 5 years. The US essentially, one, it's a larger market than any of our European markets,
Yeah.
right? And we saw the benefit during the COVID supply chain crisis of having manufacturing closer to the majority of our projects.
Yeah.
But also the US has had higher incentives, right, for domestic manufacturing than the EU or Europe broadly. So that has emerged. I know our team is talking to European policymakers and regulators, about than the European side of things. But that's been an interesting development over the past couple of years. And there are pros and cons, right? I mean, in our projects that we sell in the US are more expensive than our projects that we deliver in EMEA, right? Upwards of 50% more expensive. So it's a significant magnitude. Now, part of that is tariffs, but that divergence of supply chains has been something we've had to navigate, and we've made the decision to invest in manufacturing in the US.
Yeah.
But it will be interesting to see how that evolves with Europe now over the next several years as well.
Yeah. Yeah. Touching briefly onto that, because again, I know I think you met with one of my colleagues, Nikita at RE Plus, and the vibe from there and just generally from the US is that clearly storage seems to be coming out quite well from sort of the recent bills and the tariff. From the Trump administration, but solar's obviously taken an impact. How are you seeing that from your perspective? Obviously, you've got now this focus on developing a US supply chain, which obviously solves part of those challenges we talked about, but also there are regulatory challenges and changes happening there as well. Perhaps you can give a little bit of insight into that.
Yeah, it's been I think you used, David, the term earlier, solar coaster, right? It's been we both have been in clean energy for a while. We're not immune or not. We're accustomed to some of these ups and downs cycle. It's been one of those years broadly for the renewable clean tech industry in the US. As folks know, obviously there's been tariffs that have raised the prices of things delivered in the US, and then the OBB that was passed in July essentially removed the tax credits for solar and wind projects,
Yeah.
right? And then place additional restrictions on your ability to receive tax credits for storage and other technologies. So it's been a time of adjusting to that. You're right that generally storage emerged in a better place than renewables because the tax credits remained for battery storage, right? And for here in the US. And for for a non-Chinese company like Fluence, there's also, I think, an easier way to comply with the restrictions. But taking a step back, it's and I was at RE Plus, where is for maybe the European listeners, it's the big solar plus storage conference every year for the US. And I kind of went in thinking it would be a little depressed
Hmm.
because it's a lot of folks working in the solar industry, and there's been some serious headwinds this year, and there's probably less people. I think all that's fair, but at the same time, I left pretty energized
Yeah.
because I think this industry is resilient, right? People just figure out a way to keep things going. I talked to a bunch of developers who are, no, we're going to move forward with our projects. We're figuring out a way to make things done. There's new innovation happening. So yes, there are headwinds, right? The cost of things have gone up. There's
Yeah.
a shorter time window on the tax credits for renewables, and that will have some effect on the medium term growth prospects. But honestly, leaving RE Plus, I just feel, hey, this industry is going to figure it out like we always have, right? And as I alluded to with the energy demand coming from AI, solar plus storage is the best near term answer to supply that. So there's also tailwinds to help combat some of the uncertainty we faced.
Yeah, I think that's one of the. I should say there's always a silver cloud, and quite often in our industry that's turned into sometimes a platinum cloud because again, as you say, we kind of find a way to monetize and take advantage of the challenges, and that's again one of these things that I should say to some degree everybody is focused on AI and data centers. Globally,
Mm-hmm.
every country now has an AI strategy and wants to be a leader in data centers and AI, which is cool. But again, it all has to be powered, right? And
Right.
we're in a situation where it's there's not an abundance of surplus more often than not in most countries. So if you're really going to up significantly the demand, how are we going to address that? And that clearly, as you say, gives an opportunity to solar and storage. How are you, again, almost like strategizing or seeing that again play both in the US and outside of the US in terms of how are you allied to and approaching the developers of data centers? Again, in some degrees, you might see storage and data center developers being one and the same.
Yeah, and I think it's similar across all markets to your point, but we're already deploying a lot of battery storage systems that are serving this data center growth. But in my mind, there's two types of things we do. And when I say Fluence, I really mean battery energy storage systems, but it's something Fluence has focused on well. One is just deploying our energy storage systems in the same territory, right? The same
Mhm.
load zone or transmission zone where data centers are happening, so that that area can have more energy and capacity, right? For example, we just did a 300 megawatt 4-hour project with Orsted as our customer in Arizona, right? They had a big solar project, then they brought in Fluence with this big battery, and it's in Arizona. And what then the utility wanted, that new energy and capacity coming from the solar and storage, because Meta was just building a new data center nearby. So it
Yeah.
wasn't physically at the Meta data center, but was in this utility's territory.
Yeah.
And they're saying, great, we know Meta is going to be bringing on more load. So we just need anywhere in our territory more energy and capacity in the near term. And we supply that battery storage system, and there are a lot of projects happening like that in a lot of markets. I think the second way that is more, I would say, still in the evolving, let's see exactly how it unfolds, is putting a battery energy storage system right at the physical
Hmm.
data center, and actually charging and actually just discharging energy in directly to the data center, right? And that can help with both backup power requirements. For example, we did a project with Google in Belgium where we replaced some of their diesel backup with a battery
Right.
storage system. So it can help with that. Or it can actually help new AI data centers go to the interconnecting authority and say, hey, we want to put 200 megawatts of load right here, but we're bringing a battery so we can help with times where there's peak energy demand or that we have a big voltage a voltage change. So those are evolving, and we're part of those conversations with customers. And those are the two ways that I've seen batteries been used for this AI growth. And but I think it's a very real trend, and will be a big source of some of our projects in the next couple of years.
Yeah, because you look at the fact, even with solar and batteries, both again globally, permitting and connection to the grid is a huge challenge. Actually, getting a grid connection, certainly in the UK and a lot of Europe, can be challenging. Right. Potentially in the US also. So again, that's an opportunity for batteries to play, as you sort of alluded to there. The demand is high. There isn't a capacity, or the capacity isn't as strong as it might be. But batteries is one of those areas where you can provide a solution, or at least to smooth those things out a little.
Exactly. It's nice coming to be able to have a tool in batteries that has a few different capability, right? And it takes up much less land, right? Oftentimes, it can provide different things when you need it. And especially, I'd say, with the cost, how much the cost of batteries have come down, even over the past 2 to 3 years. I think last year, battery prices on average dropped by 45, 50%. So now when you look at the economics, these are quite affordable ways to provide those services.
Yeah.
And critically for data centers, you can do them fast, right? These data centers, it's all about, the speed at which they can get these data centers online.
Yeah.
And the fact that, we can deliver battery energy storage systems within the next year at real scale is a big deal.
Yeah. Yeah, no, absolutely. Touching on something you talked about, obviously the cost reductions, continually the cost curve coming down on batteries. I think that's an interesting play. I know that you, pretty much like everybody else, are deploying primarily lithium-ion batteries. And we've been watching and working with, to a degree, long-duration energy storage companies, be that thermal or be that chemical, for some years. And I kind of have a little sympathy for them to a degree, and also those who are looking at second life batteries as a solution. And again, we have clients in that space as well. But it kind of seems every time you go down that path, lithium ion just gets better and cheaper. And duration goes from at a couple of hours, and now 4, and now 8, and how far can that go in terms of long duration? So but I appreciate, as any company, you've probably got an eye on other technologies that may or may not come through. Again, do you see, and just actually this week I saw that is it Natron, the US sodium company went to administration. Likewise, we've got clients in the sodium space and zinc also. So yeah, just to get a view, I guess, on the technology of do you see anything else coming significantly into the battery or to the storage space that perhaps is a different chemistry or a different solution?
It's funny. We see ourselves, Fluence, as a technology agnostic company, right? Yeah. And I mentioned the origins, and it really started as how do we solve these problems for the power grid, and just over time, the answer was usually lithium ion. Yeah. Right. So it wasn't like we have to be lithium ion. It just usually, to the points you made, the answer ends up being lithium ion, given its cost and performance quality overall. And even on the long duration, it's been interesting to see evolution. The first batteries back in 2008, 2009 that we deployed were 15-minute duration. Right. So these you could max, the max power you could charge and discharge for 15 minutes, right? And so at that time, when people said long duration energy storage, they meant like, can you get to 1 or 2 hours, right? And then lithium, the price comes down, the performance improves, you can do 1 or 2 hours, right? Then long duration is 4 hours. And of course, today, most of the battery systems we're deploying are 4 hours in duration. But we're starting to see 8 hours, right? And lithium ion, again, seems to be the answer. So we've looked at sodium ion, we've looked at solid state, other technology innovations that I think it's really important people are doing, whether it's at the research or startup level, right? But to your point, lithium ion keeps being the answer. And so now, Italy, Ireland, they're multiple markets for 8 hours. They're moving towards 8 hour duration, right? Yep. The UK. And as I said, when we look at it and we have a team that looks at these new innovations, lithium ion continues to be the answer, right? In terms of what do you get your best bang for your buck. Yeah. And of course, it helps now that we've set up a global supply chain that's manufacturing billions of dollars worth of these things on a monthly basis, right? That's going to be very hard to compete with. Sodium ion may be able to jump more easily into that supply chain, but not unlike PV, right? That's continued to be the answer thus far. Now, I think when seasonal storage, right? Lithium ion's not the solution
Yeah.
if we're talking about seasonal storage, but for getting up to 8, 10, 12 hours that, discharging and charging the same day, it's continued to be the answer.
Yeah. Yeah. No, as I say, it's been fantastic. And even for those of us who've been we've kind of seen the evolution of solar, and every year it's, sort of, how do you put it? It's overshot the predictions from the IPCC and others continually for like 15, 20 years every
Pretty
year.
dramatically, right? You see that image where it's quite actually shocking how much it's overshot expectations.
Continues to be so, and again, batteries, in particular lithium ion technologies, are on that curve. So it's interesting, but to see how that might deploy in terms of that front. I mean, again, we touched on a little bit of the dual supply chains that you have and required to have for different global projects. The scale of R&D capabilities in a lot of these Asian companies, CATL, BYD, etc., is phenomenal. Again, do you see that in the US, you're able to continue to keep a pace with that? Again, different markets, different reasons why they're able to do that, both politically and cost-wise. But again, does that sort of pose any threat do you see for development of these technologies where there's the requirement to have a separate supply chain?
I would say that I think the yes to the US will manufacture a lot of batteries, right? And certainly I think there's competition, which ultimately is a good thing, right?
Yeah.
It forces everyone to be better. And I think you could argue from thinking back to my economics courses, right, to having multiple supply chains isn't necessarily the most efficient way from a pure cost perspective to decarbonize the world, right?
Mm-hmm.
But it is a reality of the world we live in that there is somewhat of a focus on having diverse supply chains. But in the U.S., I think yes, the answer is the U.S. can manufacture and make battery storage systems and remain competitive, especially for the U.S. market, right? And we're seeing that we started investing in it 4 to 5 years ago, and we're still ramping up battery cell that's where the electrochemical reaction happens, right? So it's the key part. We're still ramping up that capacity in particular here in the US. So it'll take time. Like this takes multiple years, decades really, to build a competitive supply chain. But I do believe it will happen. And certainly there's, as I said, risk from competition, but ultimately that's what you want in an important industry for the world, right? Is competitors coming out with new products, pushing you to come out with new products faster and better. And we've worked, of course, closely with a lot of our Chinese suppliers and continue to do so, right? Sure. And so there's both a lot of level of cooperation there, and ultimately, I think the competition can be a good thing for the industry.
Yeah. Looking at, I guess, with your global markets hat on, at some of the areas where you see are the future hot markets. It's interesting that you've obviously there's huge issues in certain countries in Europe, in particular with negative pricing we touched on, but others who don't have that issue but still seem to be quite hot markets at the moment, like Italy, for example, which I think is also on your radar, of course. So perhaps again, just a view on where you see the next markets that will benefit from storage to a greater scale, and both the opportunity there also to actually deploy at a greater scale, whether it's because of the resilience or whether it's because of market opportunities and merchant opportunities. What are the markets that you're seeing which are interesting to you at this time?
Yeah, you mentioned we mentioned Germany and Italy, which I both would put in that category. And even high level, we generally see markets open up when both the economic and regulatory piece turn green, right? So there's both an economic need to have battery storage, but also then there's the regulations in place that allow developers or utilities to receive the revenue or the benefit for that value. So they kind of both need to be unlocked. And once both are unlocked, then we say a market's turned green, and we expect it to start deploying a lot more battery storage. and it'll ride this adoption curve where it might be the market that takes off. It's not growing 10% a year. It'll be doubling every year, right? Once those things are working. So I think Germany and Italy, you're right. I mean, we'll see the rest of Southern Europe. There's clearly some high renewable penetration in those markets, and that should drive value of storage. I think that's still working on maybe the regulation piece to make sure that it's clear how the revenue is provided.
Yeah.
We're seeing Eastern Europe as an area similar areas with where storage can be quite valuable. Also the grid resiliency piece. Japan is a market it seems to be coming to a head, and I think will grow significantly. Chile in Latin America has a lot of storage development going on right now because they have high solar demand, a high solar penetration, and then a lot of industrial demand from mining companies and others. And the grid can't necessarily support it. So solar plus storage has become, there's a lot of, gigawatts of storage and development in Chile. The Middle East has also been a big market, right? And that's structured a little differently with these large country level, tenders, right? That drive some of these mega projects, but they have quite significant capacity coming out of Saudi Arabia and the Middle East.
Yeah.
And then I'd say, David, from solar, at some point, all these markets are going to use battery storage. There's not any market in the world that couldn't ultimately benefit from storage. It's just when versus the cost of storage versus the renewable penetration, and the regulation that it gets unlocked. So I think continuing to see new markets open, it should be like we did for solar, right? Should be the expectation.
Flipping, if I can, just briefly to get some headline thoughts from you, because again, we talked a lot about technology, and I'm very nerdy and love the technology growth. But again, for the energy transition, the mobility transition to happen, from our perspective, it's not just about the technology; it's about the people. You've obviously started in the company, I should say, employee number 3 or 4 that goes off to scale enormously at the early stages of solar. And now Fluence, of course, albeit a corporate entity, again has grown, of course, people-wise quite extensively. But when you're going into these new markets, I guess one of the advantages for us is the talent thing is quite rare, and that plays to our strengths as a headhunter. You can go and find these talents for people, but that potentially is a blockage more so than from a supply chain point of view to some degree. Is the actual availability and the ability to attract and retain and bring on board talents in the areas and geographies that you've come from. Perhaps again, I won't dwell too much on this for you, but having been through a company that scaled quite a lot and a company now that's again quite a serious player, how have you seen, or how do you see the attractiveness and the ability to obtain and retain people within your own teams, for example, within the companies that you've worked in?
Yeah, it's I promise I'm not just saying this because I'm on your podcast, but I mean, people and talent are ultimately the most important thing, right? And I mentioned, for example, even a long time at Soul Systems and then making change to Fluence. One of the reasons I stayed so long at Soul Systems was the people, right? And the team you get to work with. And then one of the reasons I joined Fluence, again, was the people, right? A team of smart, hungry, but humble individuals, right? And I think that's such an important part, especially for a lot of us in the industry who, want to succeed and obviously make good business, right? But there's a mission impact. There's a mission and impact lens as well. And so obviously it's incredibly important. I think you're right that it can be, especially in an industry newer like battery storage, you can't just go out and get people who've worked in it for 15 years, right? And have all this experience, because we're essentially figuring some of this out, right? And so you have to rely on hiring, smart people that work in energy, and you can train up about battery storage. So there's never going to be engineering talent, is super important, right? But also folks that understand the commercial business side. So always we're looking for new talent. I think Fluence has been successful again in that we have, our mission is to transform the way we power the world. And so that mission and the culture helps retain that talent as we bring it on. And as certainly as you're growing, it's fun to be part of a growing company. That's how I've always thought about it. But it's a constant challenge to find new talent, right? And retain it and grow it. we're also seeing in the US, even at the EPC, engineering, procurement, construction level, there's just not enough, skilled electricians and laborers to support all these projects that need to get deployed.
Yeah.
So kind of at all levels, there's a push for talent. But I think ultimately it's a good thing. Like folks like you will then bring in the right talent, and we'll learn and we'll figure it out together as the industry grows, right? That's what happened in solar, and then I think you see the same thing happening in battery storage.
Yeah, absolutely. I think it's one of the great things that we love. Clearly, we're not here to pitch Hyperion, but we do find those niche talents. But actually, what we enjoy more often than not is actually when we're able to bring people who want to be part of a mission, like
Right.
Fluences, who want to be giving of their time to something more meaningful, as well as obviously earning hopefully enough to pay the bills, but to do something meaningful with their time. And it's great when we've been able to move people from oil and gas, from traditional automotive, from other process industries into a sector because of the skills and the talent they have, which may not be industry specific, but is there in other regards. So yeah, no, it's great that you see that, and I think that's one of the challenges I think we have as an industry as a whole is to be more receptive to talents that don't necessarily have, as you say, 5 or 10 years of
Yeah.
storage, because they really are to find.
I agree. There's been some great hires from those fields. I think also we've benefited a little. We obviously started as a joint venture with Siemens, right?
Mm.
50-50 partner, and have taken, and both then and continually hire people from Siemens or in the US like a GE. And those are much larger organizations. And I think we found good people from those companies that want to work at something a little more entrepreneurial, growth focused, right? Fluence isn't a small company anymore, but it still is much more entrepreneurial and open than a Siemens, right? So I think that's been another way of getting obviously strong, very smart people that
Yeah.
want a little more growth and ability to pursue things internally. So that's been another source of talent as well for us.
Yeah, no, it's great to see. Listen, we're running slightly short of time. I just want to perhaps get your crystal ball out and have a look at what the next 2 or 3 years looks like, potentially for Fluence in particular, but generally for the storage markets. Any particular headlines you see, or things that you are particularly interested to see how they evolve in the next 2 or 3 years?
Well, first, just remain incredibly bullish on how much battery storage will get deployed. Similar to the point you made about the solar graph, I think you could draw a similar one for battery storage, and maybe not to that scale yet. But I think just more and larger systems than people think will happen.
Yep.
The IEA said I think around $60 to $70 billion this year invested in battery energy storage systems globally. And I wouldn't be surprised if that number ends up being higher by the end of the year, right? But those are big numbers we're talking, right? And so I think just the scale and maturity of it is number one. And so multiple power markets now will rely on storage as one of the critical pieces for how they deliver energy to their customers. And then I think the other things to keep an eye on are the emerging supply chains that we talked about. It's clearly happening in the US. Will it happen elsewhere?
Mhm.
And how much of it'll be part of the solution for sure, but how critical, how big a piece of the solution will battery storage be for powering these AI data centers, right?
Yeah.
So I think supply chains, AI data centers, but just the scale of it. And with that scale, if you're an industry now doing $100 billion a year of deployments, there's going to be so much opportunity for new innovation, right? Can I help this? Can I reduce the cost of this component? Can I, design a software that will help with this piece of it, right?
Yep.
Like with that scale we're achieving, there's going to be so much more innovation. There's investment, there's competition. So, 3 years from now, I fully believe we'll have, much better battery energy storage products, right? As competition and projects force us to innovate. We'll have more talented people working in the industry. And then I'm sure we'll have, new applications for battery storage that have helped with AI data centers, maybe help unlock more transmission capacity. And I think supply chains will be more complicated, right? It'll
Yep.
be a little more spread out and complicated, and folks will need to correctly be able to navigate that.
Yeah. Cool. Well, thanks for showing those headlines. And again, thanks for the feedback from RE Plus. It's the same for Nikita, who came back and said that she was expecting almost a little bit of a semi-depressed kind of vibe, but came back very much energized. And I think that's reflective of the industry as well, because in Europe, I guess the equivalent to RE Plus is Intersolar in Munich. And again, I've been there pretty much every year for the last 15 years. And there have been 1 or 2 years where things have not been going well, and you think it's going to be a bit of a hard work. But you just meet with so many people who are likewise on the journey that you're on. And some of it's optimism, but optimism that's normally come through with success, right? So it's good to see that despite what perhaps gets perpetuated, particularly in the US with obviously some of the political stuff going on, that there's still positivity that you can deploy solar, you can deploy batteries, and the energy transition is very much alive and kicking.
100%. Yeah, it's hard not to get a little excited talking to folks, and yeah, maybe we're optimistic, but it's been correct so far since both you and I have been in Cleantech, right? To be optimistic has been the right way to lean towards than being pessimistic about the growth of these technologies. And there is a real need for them, right? And in the US, I think, we're seeing, at least the way we think about it, is no longer like just alternative or clean energy, right? Now we're part of energy and being a dominant energy player here in the US, which is a goal. And so we can handle ups and downs and still continue as an industry. So yeah, maybe we're optimistic, but it's hard not to be energized by the people we work with, our customers, our suppliers, trying to push this industry forward.
Yeah, no, absolutely. Long may that continue. Andrew, listen, it's been brilliant. Thank you very much for joining us on the podcast. We'll send links to yourself and obviously to Fluence on the various pages. People can find the podcast on YouTube and all the various podcast platforms, but we'll make sure there's some links so people can come find out more or reach out. But thank you for sharing your story, and thank you for sharing your thoughts.
Yeah, David, thank you. It's been a pleasure.